The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Lovely to have you with us this evening. Good morning to our friends in Australia, and midday across the ditch in New Zealand. Nice to have all of you with us. Hank, good to see you're here with us. How's the volume, guys? Somebody just put a note in the questions box how the volume is. Can you hear me? All right, John. Yeah, good. John L. Good. Okay, everyone can hear me. That's great. Answers. Yes. Hello, Suhasini. Good to have Hank with us. Is this live, Mark? Yes, this is certainly live. Kevin from Minnesota. Great to have you with us, my friend. I owe you an email. I'm sorry. It's a few days overdue. Jeremy says the volume's good in the UK, and Hank can hear it in the Hunter Valley. So I guess they're the important parts in the world. So lovely to have you all here. Okay, let's see what we've got here. Albert, Z, hello, good to have you with us. He's a tutorial guy. We're about due to have a talk, Albert. Let me know when you've got the some paper trading done and we can have a talk. Webby, my good mate, the king of the black line. There've been some great ones this week, haven't there? Hank, Jen Yu. I don't know if that Jen Yu, is that a lady or not? We love to have ladies with us. John down in Coffs Harbour. Kevin in Minnesota. Manish in India. Marcel in Toronto. Marcel, how lovely to hear from you. Marcel's one of our longest annual code members. He's been with us a very, very long time. He's a great supporter. Lovely to have you with us. I hope you're feeling well, my friend. Marshall, you too. Mike Murphy, about time we had a talk. Mike, you Mr. Mike Story, time we had a talk. I've got all your stuff here that you've been texting to me today or putting in the question box at least. Milton, nice to have you. Neil, he's a cotton farmer. He's doing a tutorial at the moment. Pete, yes, he's Peter King. He's the short-term trading whiz. We need to have a talk sometime. Sam and Scott and Sean. Sean's doing a tutorial. Sure, Sean's up in the country or back on the Central Coast. Good to have you with us. Suhasini is a tutorial lady, very clever. She gets all her businesses set aside. She's a very involved businesswoman and puts her mind to trading. I think she's going to be one of the greats. Anyway, love to have you all with us, folks. It's great stuff. I'm going to have a very interesting conversation with you today, and I hope this is going to be a watershed. We've been talking about time and trading time on and off for a few years. I've shown you at various webinars the time signals, and I've given you a few webinars. I've talked about the concept of trading time signals. This is a pretty controversial subject if you talk to other people. Like you, like many of you, I started in this business. Well, I've been trading stocks and shares since I was a young fella. My dad was a great one for the stock market. But I got involved in futures trading, I guess getting on for 25, 28 years ago. And like a lot of you, and I guess particularly because I'm an attorney, I thought that you could learn this stuff from books and lectures and some practical experience, the way you learn the law and most other things. I went to tutorials and seminars from all the gurus you can think of and a few you've never heard of. I spent a not so small fortune on buying people's courses and books and charts and every other thing. And eventually I got to the stage of saying, I've got to stop wasting my time with all this. And if I can't find out what really makes markets turn, then I should stop wasting so much time and concentrate on my law practice, which I still had in those days. So whatever adventure you're on, folks, I've been there. I've done it all. I've had all of the frustrations, the disappointments, the bright ideas that never went anywhere. And in the process, during one of these seminars I went to in the States, very expensive, and a guy who's a big name in the business, he said that he had some ideas about the concept of trading time. This was 15, maybe longer, maybe this might be 22, 23 years ago. And he was a bit of a star then. And he said, here's the thing about trading time. He said, if you go to your bank and tell them you've made 3 hours trading, they will just look at you blankly. But if you go to your bank and tell them you've made 300 points trading, they'll lend you some money, which was his way of dismissing trading off time signals. And the other problem that goes with it is there's a whole lot of published material on trading time. And as far as I can see, and I've read everything that I can get my hands on, it's all wrong. The idea of trading time has got a bad rap. But that set me back by about 15 years from pursuing the idea of trading time. And then when I discovered the Daniel Code in bits and pieces and continued to develop it, I could then start to really hone down on the idea of time and trading time signals. And they are pretty unique because no one else does it. If they do, I'm not aware of it. They certainly don't do it well, or I would know about it. And I want to spend some time today trying to show you how magically precise time signals are. The other thing about time signals that we don't get as fully when we're trading price is that it fills in the blanks. Price will give us the important turns and the not so important turns. It'll give you the minor and intermediate turns, depending what time frame you're using. But it then has some problem filling in the gaps. With time signals done properly, with 6S as we call it, you get a new signal every day, virtually. Probably better than 98% of the time, you have a new signal every day. It doesn't mean that trade signal is going to be elected. By that I mean all signals created at the Daniel Code, either for price or for time, are conditional on the market reaching the entry point. So there are lots and lots of signals that aren't elected. But you have a signal every day, almost every day, better than 98%. So you know what to do. And the amazing thing about it is none of us can foresee the future. I mean, don't get into your head any ideas about we know what's going to happen in the markets. I don't know what's going to happen in the markets tomorrow. And if I don't know, nobody knows. But the whole point, if you have a comprehensive trading system, the last bar on the chart will tell you exactly what signals and orders you should be creating for tomorrow's trading to have the highest probability of success. And that's basically what trading programs are. They are groups of rules that conspire to put you on the right side of the probabilities. And the further on the right side you are, the more profitable that program will be. I'm not going to tell you how profitable 6S is because we're not in the spruiking business. As you know, we don't advertise. And you've got to find us. That's part of the deal. Bill Ford just arrived. Hello, Bill. But I'm going to let you find out for yourself. So please bear with me. Some of this stuff is a little bit technical. You will get it, I promise you. Occasionally I have people who write me cranky notes after webinars saying, I didn't understand any of that. You're totally useless. Well, you know, maybe the useless is two sides. You've got to try harder, and I've got to try to keep it simple. And that's not, they're not always compatible, those ideas. So in any event, let's move on and try to show you some ideas about trading time. Lots of people joining us, coming in late. Great to have you with us, folks, all of you. This is good. I'm glad I've been talking about nothing too important. Anthony D. up there in Chicago. Carol, nice to have you with us, Carol. Alan, he's the guy who got me to come and live here, Alan Varian up in Brisbane. Thank you, mate, for being with us. Carol, we don't have many ladies, so, you know, we get excited when we have ladies. We should have more ladies. I don't know why we don't have ladies. You know, in Japan, for Forex trading is hugely dominated by women, but we don't have much of that culture here. We certainly don't have many at the Daniel Code. I've got to say the ones we have got are very, very, very good traders. Sue, if you're with us, and you're not, so you'll pick this up, I suppose, when you see the recording. Great to have you with us, and Marilyn and Suhasini. Yes, we have a few women. They're very good. Okay, so let's move on, folks, and let's see what's going to unfold today. I hope this is going to excite you. Daniel Code, as many of you know, is part science, mainly science, and a little bit of art. Some of the numbers that you're going to see, they're not just Daniel Code numbers. They come from the Daniel Code. You want to prove these numbers. You have to prove them from the base of the Daniel Code. But then these numbers pop up everywhere else. 29, which is the first of the Daniel Code numbers. That's the average orbital speed of the Earth around the Sun. It's also the amount of time for the Moon to complete one orbit around the Earth. That's a synodic month, or a synodial month, as I call it. That's the average length of a month. Saturn has a 29-year orbit. Number of bones, you can read all this yourself. Finally, 365 is the final outcome of the Daniel Code matrix. Those of you who have... hello, Anthony. When am I coming to the Windy City? As soon as I get the auto trade version of this, my friend, I'll be coming to see you and a few other guys, and I'll talk to you about that as we go along. Yes, those who've done tutorials will know that 365 is the final outcome of the Daniel Code matrix. So it's rather nice when we're using these numbers if we can look at something external, because don't forget, all these numbers are coming from the book of Daniel. Daniel lived, as far as we know, about 630, 640 BC, 2,600 years ago. When you start talking about numbers coming from the book of Daniel, people tend to say, what's he smoking? That's about the nicest thing they say. Sometimes they say very cross things. But nevertheless, it's nice to see these numbers that we get from working the Daniel Code matrix are numbers that are happening in the natural world, and there's a whole lot of them. These time signals, if I can sort of give you the background of this, I don't believe in global warming. I don't see the point of electric cars, as the electricity which fuels them largely comes from fossil fuels. I don't understand the appeal of Twitter, Facebook, etc. The company has a Facebook account because Terry told me we should have. It's pretty well dormant. I don't know how to operate it, and I don't want to know. I don't admire or respect politicians, so the Trump hysteria doesn't impress me. Most Australians and Kiwis have the same cynical idea of politicians as I do. They all seem to come out of it a whole lot better off than they went into it. And I don't see them doing much for the rest of us. But, hey, that's an Australian view of politicians. You don't have to join me. If you're obsessed with politics, enjoy it. I'm interested in what happens, but I find it more amusing than anything else. However, I do care about trading, and I do care about your wealth, and wish you had far more. And I mean that. It's frustrating to me because, to me, trading is so simple, so straightforward, and easy. It's hardly ever ambiguous. 99% plus of the time, the last bar on the chart will tell you what signals to put on for tomorrow. What we've been providing you over the years, and believe it or not, we're heading up for 10 years. In December, folks, it's going to be 10 years we've been doing this for you with the Daniel Code. And some of you have been with us the whole time, for which I'm very grateful. And some of you have been with us for the vast majority of that time. We have a terrific, loyal group of people with us. But there have been gaps in there because I haven't been confident enough to release time signals for you, and I am now. I've been trading these for probably about 5-6 years, and they are really of a different caliber altogether. They are quite extraordinary. They're not exclusive. If you were doing analysis by price, you would also find that the price signals also had time cycles on them. I hope by releasing this program to you that I'm going to make you all very, very wealthy. You should be very wealthy. Trading, once you understand it, is simple and straightforward. It's a different language, I know, and it seems very hard to get hold of it. Once you've been doing it for a while and following the Daniel Code, it will become a second language to you. And when that happens, you'll actually find the markets are trying to talk to you. Believe it or not, markets work really, really hard to try and tell us what they're doing. But the point is, we don't know their language. Once you understand the Daniel Code, you'll get to the stage that you'll truly understand that markets are trying to tell us what they're doing all the time, and it's our weakness if we don't interpret them properly. So, I want to give you the idea that done properly, trading is not something to be frightened of. Trading is something to be terrified of if you don't know what you're doing, and the vast majority of people don't know what they're doing, and they lose their money, and that's a tragedy to that, because I've been there, I've done it, so have you, we all have, but it doesn't have to be. Once you know about trading, and you can understand and follow Daniel Code time signals, you should become very, very wealthy. So I'm not going to tell you how much money these markets make, because it all differs. It depends really on the volatility of what's happening in those various markets. Natural gas is a great example. 2016-17, returns on natural gas were fabulous. I get my tutorial clients to paper trade the whole of natural gas for 2016, and the returns are in multiple 100%. And 17 was great. 18's been not so good. The market's changed its spots, and that happens. And that's why you need to be flexible. Don't get tied down to just one market. That's the most common mistake people make. They say, I'm an S&P trader, or I'm a gold trader. They're the two big goers. That's not the point of trading. The thing about trading is it's not your job to be right. Okay, get that out of your mind. Your job as a trader is to make money. And the more money you make, the better trader you are. And money keeps score for you. So bear that in mind as we go through here. And I hope you can stay with me right to the end. If this becomes a bit tedious, remember this is being recorded. You can go through this on the website again when it's posted as we move along. But this is really, for me, it's a seminal moment. Time signals are something I've been using and teaching for the last not quite 2 years, 18, 19 months or so. And I really would like to give the part of it to you that I can give now. Let me preface that by saying nothing you see on a website, including my website, or that we produce for you in a trading program, is ever going to match the Mark I human eyeball. The educated eyeball is the most fearsome tool in trading. And there are some tools in trading that can have different interpretations. And to be very good at that, you need to do it, practice it, and be aware of the probabilities, which is some of the stuff I teach you in the tutorials. And that can't be replicated in a mechanical or a semi-mechanical system, no matter how much computing power you bring to it. The auto trade leader-follower version of success is still in the works. I'm hoping, I'd hope we'd have it by now. It just goes on and on and on, like a bad toothache. But it's been over 2 years in the development. And in that process, a number of people have tried to code one or more of my proprietary indicators, and it can't be done because it's mainly science, but part of it is art, which is why if you want to be really, really good at this stuff, do a Daniel Code tutorial, the video tutorial, and I will teach you how to do it. So we think we'll get outstanding results. That'll be for you to judge, and you'll see more as we go along. Remember, trend is the alpha and the omega. I am the alpha and the omega, the beginning and the end. That's what it means. It's everything. And one of the things that we need to do and always be aware of is we need to know trend, and we need to know it pretty well before anyone else, because trend colors how we handle our risk management to a very large degree. Okay, let's see what we can get for you here. So here's this question, the one question that all traders should be asking themselves. What really makes markets turn? And I've told you I went on a journey of discovery with all of the Albert, what does 6S stand for? That is the sixth seal. It's a bad thing for me to say because I've got a bit of a lisp. But you know, we've had the first seal. You can call these degrees if you don't like the word seal. They mean the same thing. The first seal is price. The second seal, that's the x-axis of your chart. The second seal is time. That's the y-axis of your chart. The third seal used to be volume. Volume used to be a very important confirming indicator in trading. It no longer is now because these markets are so fractured. There's so much over-the-counter trading. There's so much going on by the big firms in dark pools where they're matching their clients. So the third seal, volume, has now ceased to be important. And the fourth seal is an angle. And the fourth seal is a very special type of angle. And the fifth seal is another angle, a slightly different type of angle. So as we've developed and invented those things and brought them to you, it follows that the sixth seal will be the next thing that we give you, and that's going to be trading daily bars on time signals. Now, once you've mastered that, you'll be able to trade 2-day charts, 6-day charts, weekly charts, anything you like. And obviously, for those of you who are interested, there's a very big swing trading program sitting behind all of this, which we'll get round to releasing to you, in a few months' time. So this is pretty exciting. The whole idea is, what is it that actually makes markets turn? And those of you who've been in the Daniel Code for a while can see that we're doing that every day. W.D. Gann got the price of beans right once. We do it every day in many markets. So how? Well, you've heard me say when time and price are squared, a turn is almost inevitable. Now, I'm quite open. I stole that expression from Mr. Gann, when time and price are squared, but it doesn't mean what Gann said it meant. What Gann said it meant was that he had lines on his charts that were one by one. They're all drawn on graph paper, and he would say a one-by-one line is a line that goes up 1 unit in price and 1 unit in time. And from there he had 3-by-1, 8-by-1, these various lines that he thought provided support and resistance for markets, and they don't. And he also said if you are worthy, and to be worthy, most of what he did was based in Buicks, the price of a new Buick. But after you parted with about the price of about 4 new Buicks, he'd say you are worthy. And he said, if you are worthy, I will tell you the number. And the number he would tell you is 7, and it's not right. Typical broker. Anyway, no offense to our friends. I'm not sure if Jerry's with us today. He might get upset if I say that. Let's have a look. I don't think he is with us. Well, he's pushing out, isn't he? There you go. There he is. Right. Lots more people coming in. Folks, if you've missed a little bit of this, it's being recorded. You can pick it up when Terry posts it tomorrow. So have a look at this chart. This is natural gas. This is the 057 chart, which is Trade Navigator's code for one of their continuous charts. And how the 057 chart works, it just puts the price of the front month straight on the chart, which you would think is pretty logical. But there are many others. There's the 067, which is back adjusted. There's various types of continuous charts. This is the 057 one, which gives you true prices relative to each contract as it rolls over. And you can see here at the bottom, we had a Daniel Code blue line at 2.695. And the market went down, and it hit that number. In fact, Monday's close was 2.695 exactly. Now, those of you who've been with us a while will know that target recognition comes from either the bar high low or the close. So if we've got a market that's going down, we're looking for target recognition either at the low or on the close, and we expect that target recognition to be very, very precise. In fact, we expect it to be valid. It has to be within 0.1% of the market price. And in this case, the variance, the allowable variance, the actual variance is 0. The close of Monday was 2.695. Look at some of these other things that are on this chart. You can see a blue line that has 62 underneath it. That's an expiring time cycle. That's a major time cycle on a daily chart. And it's running. Let me get my tool here so I can show you where they hit. No, they do. Where can we see the tools? Here we are, drawing tools. Spotlight, they call it. Here we are. You can see that that time cycle starts from this high here. And this is a high before the high. That's an ideal place to start time counts from, or a low before the low. There are also points from which fourth and fifth seal lines can be drawn. You'll see here, from that where we start the time count, we have 62 days into Monday's low. That's an expiring time cycle. We have a fourth and fifth seal line that's also a moonbeam. Neil, I'm going to tell you all about these next week, but that's a stronger form of fourth and fifth seal line when it's a moonbeam, and that goes exactly into Monday's low. Coming off some of the other highs before the high, we have a fourth seal line and a fifth seal line. We have three different ways of finding time, because the lines are angles. They're fourth and fifth seal lines. They have qualities of price and of time. So we have three of those, all at Monday's low, and they've been sitting there for weeks, in some cases months. And we had an expiring 62-day time cycle, and we had perfect target recognition. Target recognition doesn't have to be perfect. As long as it's within 0.1%, we say that's target recognition. In this case, it happened to be perfect. And so we have a known level, Daniel code, known level of price, 2.695, and a known level in time, 62 days. And that is actually what time and price squared means. It means time is at a known DC level and price is at a known Daniel code level. They don't have to be the same. They just have to be one of the known series. When that happens, a turn is almost inevitable, and that's what we got. Pretty interesting stuff. Let me lose the big red dot and move on to the next item in here. Don't we have... What's happening here? We are supposed to have little arrows under here, aren't we? Maybe not. There it is. Come alive. Goodness me, how we're great. Okay. Follow this stuff if you can, folks. If not, when this is posted, go over it again and again. I'm trying to show you that all markets are ruled by time cycles. This is gold, Comex gold. This is the 6-day chart. And if we simply take a 59, one of our basic Daniel code numbers, 59 periods of 6 days each, from the December 07 high, then it repeats. It becomes, it's for time, times, and then half. That's what the Archangel told Daniel. That's what we work on. So if we have that 59 there, then we're interested in 89, which is the half cycle, which gave us nothing. We're interested in 118. The way this program works, it's got 1 on there. It's actually 2. And you got a significant reaction there. Remember, you're looking at a 6-day chart. Each of these bars is 6 days. And you got a 1, 2, 3, 4, about a 7-week counter trend there. And then up into the high. And at 148, which is, it says 1.5, it's actually 2.5 times, you got the momentum high, the all-time high of gold. Sticking that same ratio, look what happens when you got to 3 times. That was the end of the rally up. Let's keep moving on. Here we are. I'm not entirely sure we're getting the right charts here, folks. Bear with me. Yes, we are. So that's that way. This will be this way. Here we are. This is a continuation of gold. And this is, we just looked at time at the high. I know this is all historical, but the only way you can prove this stuff is by showing you what's already happened in the past, to give you confidence that it will happen in the future. And it will. Whatever has been is and shall be again. Straight out of Proverbs. Okay, so here's 62. That's our dominant time cycle for lows in the Daniel Code lexicon. So we've got a cycle here that goes from the July 2014 high into the October 2015 low. 62 days. Just look at its subdivisions after that. It says half, 1, 1.5, 2. It's actually 1.5, 2, 2.5, 3. You get a high, you get a counter trend high, you get the next counter trend high. These things are not happening at random. Okay, so you saw the high, now you've seen what happened at the low. Let's take this down a little bit further. Let's have a look at vibrations in price and time. Now this is the S&P, this is the index on the 6-day chart, and this is a subsection of the major trend. Try to get your eye to look at two things simultaneously. First of all, the numbers on the right, they're the Daniel Code retracements of the major swing, and also have a look at what's happening on the lateral, the blue lines, which are at an angle. They're an angle, and you can see many, many turns. I won't go so far as to say every turn, but many, many turns. And remember, this target recognition is valid at the bar, high, low, or the close. Some of the ones that look like they've missed, if you look at these ones around March 2011, have a look at the close. They haven't missed. They've closed exactly on those numbers. So this is a market running from March 2009, a bit earlier than that, February, all the way to 2013. And you're seeing how it's reacted to Daniel Code time and price levels on a macro basis. This is a 6-day chart. You can't trade a 6-day chart. We use that for analysis, but the bars are too big. They're way outside any concept of risk level that you may have. But they demonstrate this idea that markets react not only to price but also to time. Okay, this is the S&P. We're still on a 6-day chart here, and here's the major high that we had. It may not be the major high much longer. The market's rallying very strongly, but nonetheless, we simply go and use our basic numbers with the Daniel Code time channel tool. 44, which is the number for gold. If you don't understand that, read the articles at the Daniel Code website. There's about 90 of them. One of them is called Masterclass 1. It's about time. The other's called Masterclass 2, Timing Gold. Read those articles. They're long. It'll take a bit of studying, but you'll get the basics of how we use the numbers for time signals on the macro, time cycles on the macro chart. 44 is the number for gold. 59 usually gives us highs. 62 usually gives us lows. 70 is what we call the heathen number. It's not heathen at all. It just comes from a different part of the book of Daniel. 70 is the number that Sir Albert, I'm getting mental lapses here. The father of modern science, Sir Isaac Newton, he wrote a big paper on the number 70 from the book of Daniel, and he maintained that the book of Daniel was the most important book in the Bible because it foretold the coming of the Messiah. It's called, incidentally, if you're interested, it's called Observations on the Prophecies of St. John. It's available on the internet. It's free. It was written by Sir Isaac Newton a couple of hundred years ago, and he uses some scriptural geometry to work the number 70. I don't get that, and I actually don't agree with how he's done it, but I'm not going to argue with the father of modern science, albeit it's enough for us to say that Sir Isaac Newton thought this was a valid way of interpreting numbers that we come across in the Bible. once we do that interpreting, it becomes pure math. It either is or it isn't, so it's pretty simple. But you can see here, I'm just trying to continue to make the point that all markets are ruled by time and price cycles, and they are the Daniel Code time and price cycles. To drill down from that, that was a 6-day chart. Your chart should have changed now. We're down to a daily chart. This looks like a cat's breakfast of lines, I know that. We don't have all these lines on at once. We only ever have 4 lines on a chart at any time for the time cycles, but I put them all on to show you, starting with the big dramatic high in February, then the little mini crash, and everything that's happened since then. Every high and low has come at a Daniel Code time cycle. They're not all on this chart. I gave up trying to put too many on. I thought just this would make the point to you that these time cycles continue to rule all markets, not only historically, but right up to date. They always do. A lot of you guys I know are real gold buffs, and those are not. You're very interested in trading gold, which I am. Gold's a great trading market. I'm not a gold bug. I'm not into this gold's ever going to replace currency. I'm not believing the gold standard's ever going to come back again. But I'm very interested in gold as a trading vehicle. Have a look at this chart. This is a 6-day chart. And what we've done here, I wanted to show you, is I've tried to set as a hard task. I've simply taken a period from a swing high to the ultimate high in gold, which was September 2011. That period is 76 days. Now, that's not a Daniel Code number. The market has selected that number itself. So it goes 76 days high to high. Look what happened at the next 76. That gave you a very significant low. That was a big, big down bar. Massive. Have a look at that on a chart. That's a huge bar. And there is time. Okay, our mantra is, it shall be for a time, times, and a half. So there's time. It's already established 76 high to high. It repeats itself straight away. Those of you who've been with us for a while will remember this is exactly what happened at the 2009 crash low in the S&P. We had a 59 cycle, high to high, and then high to low was 59 exactly. Time cycles repeat. So let's move on. There's the major from the 6 bars. There's it repeating for you. That's not a Daniel Code number. It simply selected itself. Now let's go on with it. Let's take that 76, which is not a Daniel Code number. That comes from the chart. The chart has selected 76. And look at what these Daniel Code vibrations give you. A low, another low, the counter trend high, the big, big drop low down in April 13 was a massive, great big bar down there. So's the next one that comes at the end of June. Then it misses the next high, it finds a low, then it's 1 bar off the high in April 2014. These numbers are valid for plus or minus 1 period and 1 period only. Doesn't matter whether you're using them on daily charts, 6-day charts, 12-day charts. They're valid for plus or minus 1 period. And that is because it is valid to start your time count from either a chart high or a chart low that's greater than 1 standard deviation from the mean, or from the closing high or closing low, which may be 1 bar prior to the chart high. We have chart highs, we have momentum highs, we have closing highs. So because it's valid to start from either a chart high or a closing high, that's why you get a variance of 1 period and only 1 period. This is gold with the 76, which it selected itself. The market chose that number, swing high to swing high. We put on some of our divisions, and we effectively get every significant turn. That is not the only time cycle that's working at the time. There are other time cycles. There's low to low, high to low. And if we put them all on, you would get every single term. But I'm trying to keep this clear enough that you can understand that this is time on its own ruling markets. This is how powerful time cycles are. I've then taken this down and I've broken it down to show you everything that's happened. There's your 76. I've combined these last two charts, if you like. There's your 76 high to high to start the chart. That's what the market selected, not us. And from there on, we've put in the Daniel code ratios to find minor cycles, Daniel code cycles within that 76-day period. And you can see how dramatic they are. Almost every high and low is happening at or within 1 bar of these Daniel code ratios. Now, you know, if you don't think that's extraordinary, leave now, because I think it's incredible. Nobody is more amazed and excited by this stuff than I am, I promise you. It's the research of finding these time cycles thrills me. It really does, because I love markets. I'm obsessed with markets, but I'm obsessed with knowing why they do what they do. That's what I'm all about, and that's what these cycles are showing, a glaring light. They're showing you one part of what causes market turns that you're not generally seeing. Okay? Here's a closer view. All that stuff on that chart was a bit mushed together. I've just expanded it a bit. I've taken out the first 76 and the next 76, so we're actually starting from the 76-day low, or it's a 6-bar low of 76 periods, and you can have a closer look of exactly where these cycles hit. And they are hitting at plus or minus 1 period from every significant high or low in gold. Okay, so if somebody said to you gold is completely controlled by time cycles, you would say, don't be silly. But here it is. This is either right or it's wrong. This is either math or it's not math. And what we've done is we've let the market select the cycle, which makes the exercise a lot more formidable than me finding the cycle. Here's another idea for you to look at. This is still on Comex Gold, 6-day chart. The rally, the 2016 rally, have a look at it. The rally was 37.5% in price and 2.375 periods in time. And that means time and price were squared at that high. And that's extraordinary. Why would this rally, the biggest rally on the chart, from the low, the October-November 15 low, why would that rally stop exactly at that number? Because that's Daniel code resistance. And it also had a time cycle expiring on the same bar. That's what happens. Okay? Let's move on. Mike thinks this is incredible. Mike, time you did a video tutorial, mate, brought yourself up to date on all this stuff. Mike's been a very long time Daniel code client. He was with us years and years ago, and he stepped away from trading for a while, I think, or he's been trading short-term charts, short-term trading, which is a bit of a no-no. I mean, you can if you want to, but it's not optimizing your performance. But what you have in the Daniel code now, Mike, is very different to anything you've seen before. Okay, same chart here, and we've just said, okay, not the high to high, let the market select a low to a low. So it says low to low is 82 days. Let's take the Daniel code fractals of 82. Same thing. Every significant high, every significant low comes at a known Daniel code time cycle. I repeat, this is only one cycle. You have a look at the big October-November 16 low. It doesn't get that. Why not? Because that comes off a different cycle. Okay, there are a number of cycles working at any one time. I'm trying to show you the various pieces of them to prove how dominant time is on all markets. Okay, and once we've got the macro picture, it is valid to argue from the macro to the micro. It's not valid to argue the other way. You can't argue from the micro to the macro, but statistically it's valid to argue from the macro to the micro. So what we've done here is we've given you a micro chart. We've moved down from the 6-day bars to the daily bars. And what we've done is we've let the market select a minor high to a minor high, and it's 67 days. This is almost random numbers, except it's not. It looks like random numbers. It'll feel like random numbers to you. The whole point of what I'm trying to show you is they are not random. Nothing in markets is truly random. So this market selected 67, minor high to minor high. Look at the chop up of the Daniel code ratio. 92, which is that's 37.5% of the 67 gives you the ultimate high. The next number gives you an important low. The next number gives you the big crash bar that goes right down. That's the momentum low. It rallies back up. We get a minor high. Down it goes again. We get the counter trend high, and then we get what was at the time a significant low, although it may be getting taken out when the new contract rolls over. So this is the same thing on a daily chart. Let the market, the test I'm setting myself to show you is, let the market select the time period, high to high, low to low. Okay, let the market select that, so we're don't have any prearranged number deals. They're almost random numbers, except they're not. They appear random, but they're not, because if they were truly random, the fractals of them, the cut-up, the slices of them, the fractions of them would not be significant. And the fractals, as you can see, are hugely significant, which should prove the point that if you're not using time signals in your trading, you're missing out on a lot. And I know you are missing out on a lot, and you're missing out because of me. I haven't been able to put this stuff on the website for you, but I spent the last 2.5 years trying to get this into a auto trade program, a leader follower type program. That's still coming. But what I'm giving you now, or what we're going to start with next week, this is what I'm showing you, is the manual version of this. You'll be able to come along each day to the website, grab the signals for the day, put them on. You'll be trading not quite perfect time, but you'll be trading very close to perfect time. As I say, the same problem is nothing can replace the Mark 1 eyeball. For you guys who are doing tutorials, your returns will be better than anything you're ever going to see at the website, and better than anything you're ever going to see in a trading program. Having said that, we expect the results on the website and on the trading program to be better than anything else out there in the competitive subsphere. This is more of the same. This is daily high to high. Just showing you, let the market pick the numbers. This is a different high to high. This is 93 days, not a Daniel code number. Look what happens when we go to the fractals of it. We get a low, we get the next low, we get 1 bar off the counter trend high, we get 1 bar off the counter trend high, and that gives us the huge momentum bar down. We get the next low before a 5-day rally, and then we get nothing much right at the end on the 162 days. But that whole period that the market chose for itself, high to high, we've shown how that splits up on these Daniel code ratios, and it does this all the time. Okay, if you're getting sick of this, bear with me. It's not all that much more to go. This is 56 days high to high. I'm trying to bring this up to current time. This is the S&P. And into the high to high, into the February high, you know, the big drama high before we got the lovely little crash, that was 56 days. That's not a Daniel code number. We did have a 70 cycle on the day after the momentum top, actually at the chart high. There was a 70 cycle, which is not on this chart. I've shown you that in previous webinars. Let's take the 56, just let the market decide, high to high, 56 days. Look what happens when you chop them up. And what I put on here is some price as well. The red and black lines are price, support, and resistance. Look at the turns. Time turn, time turn, time turn. And they're also, some of them are price turns as well. Okay. Let's have a look. This is price at the high. We had a blue line, Daniel code blue line at 28.78. The high was almost exactly that, 28.78. This is this February high. Crash down, 25.28, the Daniel code black line, the last level of support or resistance in any market. Stopped it like it was shot. Away it went. Webby's the king of the black lines. He loves them. And we also got a 62 period low at that low in mid-February this year in the S&P. That's support. And it just shot the market back up. That was the low. It came back for a retest 4 days later, and off it went. Have a look that we don't have a lot of obvious price target recognition here. That's just using the highs. But look a bit closer and look at what's happening on the close. you're getting this target recognition on the close that you didn't get at the bar highs. And it's very, very precise. All of these are within 0.1% target recognition. So you combine them, you can see that if you can use time and price together, you will find every turn in the market. Okay, let me talk to you a bit about what we're going to do with this six seal trading. We're going to start on Monday putting out some signals for you. To start with, give us a bit of time to walk into this. It's a free trial for all of you who are members of the Daniel Code. It's going to take us maybe a week or so to just get it all worked up the way we want it to, but the signals will start getting posted for Monday's trading. Now remember these things, please. Entries for all futures, and we're going to start with futures. We can do Forex as well if there's enough demand for it. Entries for futures are 2 ticks above the true high for buys and 2 ticks below true lows for sell. Remember what true highs and true lows are. Where there's a gap, the chart high or the chart low is not the true low. So the rule is if the chart low is greater than the previous day's close, then the true low is the previous day's close. In other words, if there's a gap, the market's had to move from the close of the previous day to wherever it opens, and then it will start moving up and down, and we have to account for that. We have to account for the movement from the gap into today's market, and we call that true high and true low. It's a very basic part of trading that you should be aware of. Make sure you check our numbers against the chart you are using. I don't use electronic charts all the time. So, for example, wheat, I'm going to use the W2 chart to create my signals. You are going to have to trade ZW or ZW if you're in the States. Same thing, just a different way of saying it. So remember, the numbers I'm giving you may not be the right numbers for the market you're trading. In some of these markets, the electronic version of the charts has notable difference to the other chart. One of the reasons for that is settlement price. Settlement price is a convention. Most of the big, really big hedge funds like to trade market on close. They don't put their orders on during the day. They just trade market on close. Well, that leads to problems because someone gets a better fill, someone gets a worse fill, then there's arguments, people get unhappy. So what the exchange did, they said, we will have a settlement price and we'll monitor the trading in the last 10 minutes. We'll take the average of that. We'll declare that to be the settlement price, the official close on settlement price, and everybody who's got an MOC, market on close order, will get exactly the same price. Well, that's fine until we got into electronic trading. Electronic trading, or any of the charts that have a 3 after them, the close is not the settlement price close. It's literally the last trade of the session, the last trade that went through a nanosecond before that session ended. So I don't always use electronic charts. I use the 2 charts with the settlement price close in them. So check your numbers for these signals. Don't blindly follow what we've got here, because we don't use electronic charts for our analysis in general, although some of these markets, they are electronic charts. You know, just exchange's policy in life is to make life as incredibly difficult and confusing for everyone as it can. Okay. We always use daily bars for our trade signals. You have to wait till that daily bar is completed. So do we. And we can then create the signals when we get the end of day data, which is usually about 2 hours after markets have closed. Now, I know that if you run live trading data, you can get a chart 1 minute after markets close, but you can't get the settlement price until it's announced by the exchange. I've tried putting signals much earlier, like doing them immediately the markets close, so you don't have this 2-hour gap between when the markets close and Trade Navigator issue their end-of-day data, and then it's another 40 minutes to an hour for me to create the signals from that. I've tried to wipe that out by just taking the signals off the end of the real-time trading data. And it does unfortunately create some mistakes. I'd rather miss the mistakes. So these signals will come out about the same time as our normal TO3 and plus signals do, which is an hour after we technically get the data at the moment it's 6:30 p.m. US Eastern Time, and that for us moves around an hour with when you go on and off daylight saving. But make sure you check your numbers against the charts that we're using. Always calculate and use the fail point. If you don't know about this, every trade has a fail point. If it hits the fail point, you're wrong and you should be in the other way. If you get an outside bar on the day of a new entry, you must stop and reverse. Okay, now I know some of you can't because your platforms won't allow you to do it, and you're away doing jobs during the day. You can't look at markets. If you can't do a stop and reverse, that's okay. Your stop will protect you to a degree, but you won't quite get the results that you will get from someone who can do a stop and reverse. A number of platforms, Interactive Brokers is one of them. 5 years ago, I'd have told you they were the worst brokerage firm in the country. Now they've become very, very good, and their platform is particularly good, particularly sophisticated, and you can do a mandatory stop and reverse on an outside bar on Interactive Brokers. Remember, please, all orders are conditional until elected. In other words, with each order, you'll have a number for entry. Until the market gets to that number, they are conditional. When you're trading time signals, you can have cycles expiring. You'll have a market on a big run up or a big run down. You'll have the reverse signals day after day after day, but they don't get elected. All that's saying to you is the market has switched to a stronger cycle. You'll have that cycle. You won't miss the trade, but you might have 5 or 6, 7 days of putting on reverse signals that don't get elected. All orders are conditional until they're elected. Okay, so here's your free trial. We'll start posting the signals on Monday. Now, please bear in mind that we're not a tech company. I'm a humble country lawyer. Terry's a humble country tech guy in Calgary, Canada. And we won't sort of have this all swishing and booming. Give us a week to work into it. Start looking at the signals. Start thinking about them. They'll get into the system, in a couple of days. But I'll start posting these signals for Monday's trading. We're going to run model accounts on all of these, and we're going to eventually get up to about 12, 14, 15, maybe even 16 markets. We're going to run model accounts, and we're going to show them on the website. Profit and loss is always a percentage of notional margin. That is, we always use margin as the opportunity cost of a trade, because you put a trade on, you're not going to risk margin on it, but regardless of that, that money's disappeared from your account while you're in the trade, so the opportunity cost has disappeared. We use that as the base, except for some of the situations get a bit silly. The way the system is designed on margins is to protect brokers. Brokers own effectively, directly or indirectly, own the stock exchanges, and markets work for their owners. The way the margin calculation works, it can get big very, very quickly, and it takes a very long time to get small. So you look at the S&P E-minis, normally 3,400, 3,600, that's been about the historic margin. It's up over $6,000 now. We will eventually settle on half the markets from the DC markets, and we're going to cover a half from other markets that we don't cover on the Downey Code. In other words, things like heating oil, maybe some more of the energies and some other metals. Now, what we're showing you now, this is the manual model. It works just the same as the TO3 and plus signals which you're accustomed to. It's come to the website every day, get your signals, go and put them on. The auto trade leader follower version will hopefully be good for at least a trial release by September or earlier. I'm sick of talking about it. It's just gone on so long. It's embarrassing, but we're working on it. But, you say, been working on it a long time. That's quite right. So they'll be released in the hour after end of day data becomes available. Make sure your stops are GTC or good till cancel, because there's a gap of some hours between the signal release and the start of trading. In other words, a lot of these markets are almost continuous trading. They'll have a close down for 15 minutes or half an hour, and then they start trading again. But your signals aren't going to come out until basically 7:30 p.m. US Eastern Time or Eastern Daylight Time. 1 hour after we're supposed to get our data from Trade Navigator. So about the same time as the TO3 and Plus signals are released. Results between these markets is going to vary substantially according to the volatility. Those markets with the best up and down moves will do best. Just look at a chart, picture good moves up, good moves down. They're the ones, that's the sort of volatility I'm talking about. They'll do best. Now I'm going to select 3 markets. And the 6 seal signals for those markets will be added to the TO3 Plus packages at no additional cost. So if you're a TO3 Plus subscriber, you get the TO3 Plus, and I'm going to pick 3 markets, and they'll vary depending on, I'll pick ones which are active and which I think are going to perform best, and we're going to provide you with the 6 seal signals for those markets at no additional cost. And that's because I want to show our appreciation for those subscribers who subscribe to the TO3 Plus package. They're the real backbone of the Daniel Code, and I'd like to do more for you. You deserve it. Additional 6 seal signals for other markets will be available on a standalone basis. We haven't talked about cost for those, and we'll work that out. But you should be trading more than one market if your account will allow you to. I'd rather see you trading 2 and 3 markets with small margin than this idea of I'm a gold trader or I'm an S&P trader. That's rubbish. You should be able to trade all futures markets. All we're interested in is volatility, because that's what makes the money for us. Okay, folks, if you want to be a super trader, you'd like to learn how to do this stuff for yourself, and remember, if you learn this stuff from me, you will be better. Your returns will be better than any program that you'll see at the website or in a computer program, because nothing is as good as the Mark I eyeball if it's properly educated. If you'd like to be able to trade this sort of stuff, send me an email, jneedham@thedanielcode.com, with your phone number and country and location, so I can call you at a reasonable time, and I'll be happy to discuss your trading and how I can take you to the level where you can do everything that you've seen today, and make you a master trader. Now, the fee is $7,500 US. I do get a few people asking me to call. We have a chat, never hear from them again, and I think they choke when they see the fee. It will take you anywhere between a month and 3 or 4 months. Some people it takes 7 or 8 months. Depends how much time you have available to put in the paper trading. There's a lot of paper trading involved once you've learned the program, because what we're trying to do is set this new language, this Daniel Code language that you're going to learn. We're trying to set that in your brain, so that that becomes your first response. That takes a little while, but people do it in a month if you have time to do the paper trading. If not, we work at your time. But if you're interested, give me a call. I look forward to that. Free trials, you're welcome to a free trial of everything at the Daniel Code website, and at Trade Navigator. If you haven't already had a free trial there, Terry can arrange that for you. Just hit the register button, follow the prompts, and any problems, contact Terry at support@thedanielcode.com. This is our compliance. It's getting blurry because Microsoft insists in not making their product supportable. In other words, this was created an earlier version of Windows, so with the new version of Windows 10, it's got it blurry. That's a ridiculous thing to happen, but Microsoft like to do that, make you buy the new program, I guess. Trading is very risky. I want you to be aware of that. If you don't know how to trade, it's incredibly risky. You will almost certainly lose your money. Once you have learned how to trade the Daniel Code way, you've done the tutorial, or you've learned enough from the website that you're comfortable, keep learning. It's a great thing. Being a trader is the ultimate way of life, and quite frankly, once you get this right, you'll be making more money legally than anything else you've ever seen. Finally, I want to show you what the 6 seal is going to look like. And here's a page. This is this is just a made-up page. Don't go running around with it. This is nothing. This is Terry was kind enough to just fill out a few signals for me. They're not real, and they're not for today. They're just random numbers and some words, just to show you, give you a feel of what it's going to look like. You're going to get buy and sell signals. They'll either have a 1-bar stop or a 2-bar stop. Or they might have a money stop, depending on what the trend is. And there's a comment box at the right, which hopefully is not going to say figure it out, what Terry's put in there. Thanks, mate. It's not going to say figure it out. It's going to tell you exactly what to do. So you're going to start seeing that from Monday. And excuse me, we'll gradually, as the week goes on, fill out more and more markets and get that up to speed for you. So that's free to all of you. You just got to be a member of the Daniel Code. In fact, I'm not even sure if you have to be a member of the Daniel Code. I think we're probably going to put this on a public page. I don't know. I haven't had a chance to talk to Terry about exactly how he wants to release this. But you're welcome to the free trial. Go ahead. We're having a trial ourselves. We're going to run this trial for at least a month. We want to see that before we say much more about it. You can be running your trial at the same time. So thank you for that. And for those of you who were waiting on charts, you'll see the midweek chart update had been delayed. The midweek charts are all posted now. The number's back up to 40. And that's because we've got the new midweek Forex and futures charts posted. So that's it, folks. Help yourselves, enjoy it. Write to me if you're interested in doing a tutorial. Let's talk on the phone about it, and let's try and work this thing up for your benefit. I have found it to be amazing. I hope you will too. Stick with it. It takes some patience. A week or a month is not actually going to tell you your results. You need a period of time to get the results. We will actually be running some back testing from the auto trade program, which we'll post when we have it. I don't know when that'll be. I'm sick of making promises and then it doesn't happen. Okay, Mike, I'd love to hear from you. Yes, let me know when you're free. We'll get that done next week. Kevin, I will get a response to you straight away. All the rest of you, thank you for being with us. Albert, I should have that paper trading from you. Thanks, John. You too. Should be nice down at Coffs Harbour Day. It's beautiful up here. Midwinter, short sleeve shirt. Isn't it fantastic? What a place to live. Wonderful. Okay. That's it, folks. We've gone 10 minutes over time, for which I apologise. Please feel free to go through this video, which will be posted sometime tomorrow, I guess. It's 9:30 in the States now. Terry may get it up tonight. If not, it'll be tomorrow. Go through it as often as you can. Try and get clear in your head that time is more important than price in market terms. I'll leave you with that thought and look forward to hearing from you. All the best. Bye-bye. Thanks, Hank. Good, Bill. Thank you, William. All right. Thanks, folks. Good to have you with us. Bye-bye.